Good morning, traders. Let's begin with the US dollar index. So the dollar index fell below 97 yesterday, touching a 96.55 during European and Asian trading, which is its lowest level in over 2 months. The pressure comes as markets fully expect the Fed to deliver a rate cut at tomorrow's policy meeting. And investors will pay close attention not only to the decision itself, but also to Chairman Powell's press conference for guidance on the future moves this year. And on the technical side, momentum remains bearish. The RSI on both the daily and 8-hour chart sits well below 50, showing rallies are likely to meet resistance. The index continues to trade in a downward channel since early August, with resistance near 97.62, which is the 9-day simple moving average, and the psychological 98 mark. Breaking above 98.5 would be needed to confirm any reversal. For now, the key support is at 96.55 with the July low at 96.38 in focus. So moving to WTI crude oil. The oil prices started the week strong, up around 1.8% and are currently trading near 64.2. The market remains volatile, caught between oversupply concerns and geopolitical risk. And expectations of a 75 basis point Fed cut this year have fueled a risk appetite, lifting equities and helping crude hold its range. But still, the outlook points to a large surplus, which is 1.7 million barrels per day in quarter four, expanding to 2.4 million next year, which could cap the upside. And technically, oil has support at 63.68 and 63.78. Holding above these levels could open the way to 64.43 and further towards 65.61, which is the 50% retracement of the 70 to $61 move. But traders should be cautious of false breakouts. And on the downside, if price slip below 62.62, we could see a test of 62 and even 61.45. And turning to gold, a spot gold surged to a fresh all-time high of 37.03 yesterday before holding near 36.90. A weaker dollar, a softer treasury yields, and anticipation of Fed easing have kept the bullish momentum alive. And the Fed decision this week is key. Dovish signals could send gold through 3,700 toward 3,750. And on the flip side, unexpectedly hawkish commentary could trigger a short-term pullback. And technically, gold remains overbought with the RSI near 79, but bulls are still in control. Immediate resistance sits at 3690 and 3700, while support is seen around 3627 and then 3610 and 3600. A deeper correction could retest 3550 and potentially 3560. And finally, a look at euro dollar. The euro extended gains at breaking above 118 and touching 118.68, which is its highest since July. Support came from hawkish remarks by ECB board, who stressed inflation risk remain dominant. With the Fed expected to cut rates, euro has momentum on its side. And the daily RSI stands above 65, confirming bullish momentum. Having cleared the September 9 high at 117.80 and the year-to-date high of 118.30, the pair now targets 118.85 and possibly the psychological level 120. And on the downside, a fall below 118 could trigger a correction back towards 117.36 and 117. So that's all for today's morning update, and all eyes now turn to tomorrow's Fed decision, which is likely to set the tone across all the currencies and commodities. Thank you.